Hello, everybody. I'm Jason, the Wizard of Ops, and with me, as always, is Jay, aka Dark Matter. Jay, how you doing, my friend?
I'm doing awesome. Wiz, how's everything with you going? How's your weekend?
Oh, it was good. It's good. The pool is open, so I don't see my kids very much. But yeah, how was yours?
Yeah, pretty good. Summer action in full swing, basketball tournaments galore, and on the road constantly. So I'm doing great.
On the road. What did you get?
That's right.
Where was the tournament?
Good old spooky nuke in Pennsylvania near York, Pennsylvania,
Ah,
Lancaster, Pennsylvania. For those of you in the Pennsylvania area, probably know of spooky nuke, but it's incredible. I mean, the hedge funds investors got that one right. Like they put money into kids' sports, and I mean there was over 100 teams, girls
wow,
ages up until high school. So it's pretty incredible.
wow. What
Yeah,
time did you get home?
it was pretty late last night. That's why the trade plan was not at its usual market open on a Sunday. So uh, I
Was
hope
you like
everyone bared with
sitting
me.
there looking at ES trading on your phone? Like,
No, do not trade while driving, all right?
like and subscribe. Don't drive and trade.
Yeah, let's avoid that. Although Volland has an incredible mobile website, so don't forget.
Eh, we gotta improve that thing, but it's all right. It's okay.
It works.
You could access it through your browser on your phone. A lot of people seem to do that. So, um, but yeah, maybe one day we'll do an app, but that's not anytime soon. So, um, well, Friday we got our Vol event. Um, so for anybody who's unfamiliar, any I don't know how many viewers would be unfamiliar with this. Most people came to me because of the Vol event study, but last Friday we over VIX by what, like 4 points. The market dropped 2.65%, and VIX was up 5.5 points. The implied VIX rise was 2 points, so I guess it was about 3.5 points over VIX. If it over VIXes by 2 or more points, we call that a vol event. And our studies show that when a vol event occurs, currently 93% hit rate, we will see the day before's close within 3 weeks. The only 2 times it failed was in 2015, and the Trump tariff timeframe had 4 vol events, and the first one failed, the subsequent 3 succeeded. So
Which
now
in
we're
itself was pretty that's pretty impressive, right? To have 3 fall events like that.
yeah, well, all of the COVID ones succeeded. So that was, I think, like 3 or 4 vol events in COVID. So it was when you see the right here, what you're looking at on Jay's screen is our spot vol beta vol hack. You can see we were over VIXed 3 points, and then what happens is we get a vol crush, and the market shoots up, and within 3 weeks, 93% of the time, we will hit that target price of 75.80, give or take, just 75.80. If you look at the options for 3 weeks from now on that 625 deadline, you will notice that they are only pricing in a 31% chance of success, and our studies show that there's a 93% chance of success. It is one of the most mispriced opportunity that we have ever studied. Kind of the dynamics behind that are recently, I mean, a lot of people make big deals out of gamma hedging, and gamma hedging, like, gamma drops rarely happen. I mean, very, very rarely happen. Okay. Yes, Trump tariff time frame was probably a gamma drop there. And I mean, on a swing basis, right? Intraday, they happen more frequently, but not too much, right? The Trump tariff and the COVID, they definitely had some gamma hedging on a swing basis. Otherwise, there's not really that many instances of where you can point to a certain candle or whatever day and say dealers had to gamma hedge here, right? it's usually an outlier. The first way dealers deal with large moves is they just change the price of the option, right? Option pricing is not necessarily changed just because of dealer positioning. That is a major assumption that we've proven incorrect in a different study where we found out that the skew pricing changes all the time, and it doesn't even matter where dealers are positioned. So, but they always have to converge at expiration, right? So that's kind of that's the background for doing the vol event study. And when dealers overprice, usually because of liquidity concerns, when dealers overprice the VIX, then when that regulates, that creates a bullish flow into into SPX. The 3-week time frame is kind of more or less anecdotal. We just noticed that, for instance, that first Trump failure, if we made it 3 weeks and 3 days, we would have succeeded. So, I mean, that's more anecdotal. So, when you see a deadline like 6:25, usually you want to leave a little bit of a buffer, a time buffer on that. So Friday, I believe there was some major moves in the yen. We kind of, I'm sure we'll hear more when the BOJ does their meeting. I think that's this week or next week. I don't remember which one. But we'll probably about that then. But there's definitely a suspected intervention that probably triggered something on Friday. So, yeah, according to the study, within 3 weeks we should hit 75.80 again. Your thoughts there, Jay?
Yeah, well, this is a good segue, I guess, because that was one of my key levels and actually my overhead resistance on the week. So let me just go ahead and segue ourselves over that way, if you don't mind. So let me
go for it
over here. So I'll kind of just give you the quick overview here. So in terms of overhead resistance, I'm aligned with you. That's 75.75. Even if we have the 75.80, let's say, with the vol hack that we just saw there, you're going to get, that's resistance is what I see, at least on the weekly, right? Now, whether we get there today or not, we're not here to debate the win, but levels are levels. So that's what I see as resistance. Control is all the way back here to where we started Sunday night, right? So if you do see an increase in vol, I wouldn't be shocked at coming back towards, what I, from a gamma control standpoint, that's going to be about that 74, 73, 75 XPX. And if you start to see any, CPI, PPI goes negative for the market, right? There's a lot of moves that can occur here to the downside. And for me, more specifically to the downside, 73.50 is a gateway that will bring price down to 72, let's say 75. And if you lose that 72.75, that's a ripple effect majorly there as we then chase 7,100 and 7,000. So these are the levels to kind of keep an eye out here, not only this week, but any volatility, how we react coming out of CPI. At this point, I can't be chased. I'm not a chaser here, right? I would love to get a little bit of more of a retracement than we even got Friday. To be honest with you, Wiz, I think for me, like some of the key stocks that I'm looking at, like Micron, it lost 13% on Friday, and it's almost retraced half of that amount. So that's not an entry that I'm looking for. I would like to go lower. I would love to see the indices also go lower as well for an entry point there. But I think right now, for the time being, we obviously have the vol event. We need to see how it plays out. But that's what I have from an overhead resistance, is that 75.75. I'll go ahead and pull up Vanna, but do you want to, or Volland in the meantime, do you want to add in?
Yeah, so, I mean, the assumption that this was caused by Japan intervention screams to me, most of the time those vol events succeed pretty quickly, like way before the 3-week time frame. We're beginning to see that now. I think ES is what like 50 points, 60 points, something like that.
60 points, yeah.
60 points. I kind of laid out in the Discord on Friday. I said that I had 3 scenarios, right? My number 1 scenario was we bounce really fast on Monday, today, probably satisfy this week, maybe even Wednesday if the CPI cooperates a little bit, or maybe before Wednesday and CPI doesn't cooperate, right? I'm kind of more in the camp of I think CPI might cooperate just because oil prices have gone down. They're not up in the 150 range that they were. So, probably what will happen is CPI will probably cooperate somewhat. We will shoot all the way up, maybe satisfy the vol event this week sometime, hang around there a little bit. And I think FOMC might be the time where we will see that larger drawdown. You got to remember what popped the .com bubble. Do you remember? Do you know?
No, tell me.
Monetary policy.
Yeah.
Tight monetary policy did it. I don't think Warsh is going to raise rates. He's probably not going to rule it out. And I think what Warsh might do is, something that he has telegraphed his whole career. He wants to reduce the balance sheet, and that tightens liquidity, and that will hurt. That will hurt SPX quite a bit, and that will hurt capital. Which, a lot of these, what Google had done an equity raise. Meta was talking about it. That was a part of the Meta sell-off on Friday. Now all these hyperscalers are trying to raise money to build out their AI, and they're all competing against each other. So, I don't know what kind of pricing power they think they're going to have to justify this investment, but that's going to be what?
Well, it's also like last week we started to hear some of the, stocks raising money, basically Meta, to pay.
Yeah,
for
that's what I'm saying.
CapEx.
The equity raise. Yeah.
Yeah. So, to hear a Max 7 saying they're raising money like that's not a good sign, right?
Second one. That's the second one.
Yeah.
Alphabet did it out, and there's a big story that Berkshire Hathaway was claiming a lot of those shares. So,
yeah.
That's the second Max 7 that's announcing that. So I think that's, makes things a little dicey, but anyway.
Yeah, it's an arms race. It's one we have to keep an eye out for, and obviously that's where if I look at a few tickers, going out there, we'll come back to SPX here. But when I look at some of those that I shared previously with you, Wiz, like if you look at Micron, even for just a hot minute, that one of the hottest tickers in the AI space right now. You lose 800, there's a 200-point drop that you're basically looking at here, right? And you're starting to hit back into resistance here as we, open up the session here. So there's a good chance you go back and chase 1,000 here, this week, even for that matter. But then there's a ripple effect, and it has earnings coming up in a couple of weeks, and they're basically sold out, right? So are they going to go longer being sold out? So that will change their revenue numbers, obviously, or what the market expects them to be able to do. So there's a lot of just weirdness, is what I said earlier in the Discord channel right now going on, right? Rate hike, no rate hike, liquidity, as you said, right here as well. So, tightening up the belt is what you expect. So I'm with you. It's a very precarious level we're at right now, and your bias has to be a little bit more flexible than it might have previously been over the past couple months.
The thing I find most interesting in Micron Vanna is all of these positive Vanna. Those are all like bought puts, right? Like everybody's buying puts, and Micron, that's not a small. That's not a small implied volatility on that. Those are expensive puts, and people are buying them. So I'd be careful going into earnings with Micron.
That's right.
I'd probably be a call seller, like way out of the money call seller. I somewhat suggested that informally on Broadcom, and that would have succeeded wildly. But I was too scared to do it myself. I
Well,
don't like selling verticals unless I'm really sure.
well, it's also hard to just, with Broadcom, for those who didn't pay, the whole GPU, CPU, TPUs, like it's hard unless you have the data, right? So
Mhm.
there's a level of, I thought what Volland did show me clearly with going into AVGO's earnings was it didn't look bullish by any means.
No.
And if anything, if you were bullish, it would have told you to wait, right? And now is that wait now? I think there's more downside in what I saw in Volland. There seems to be more downside in AVGO. So,
Mhm.
there's, your platform's doing what it should do. It saved people from maybe going long when they shouldn't have before earnings.
Right.
Let's go back here to SPX. So again, let me just pull up like our key levels. Even some of these interim, we're starting to hit some of those key, at least interim weekly levels. So I love, by the way, the term structure, because I don't know, for those who follow my trade plan, you'll kind of see throughout last week how the term structure started to highlight and showcase the 7,500 SPX. It was starting to weaken, right? And I love how the term structure gives me that. I can then pinpoint on what expiration, see my thesis. So this week, if you take a look at this, Wiz, like what I find interesting here is, those key levels across multiple time frames, like the 7,600 SPX level, like would not be chasing longs above that. Let's say if we did get a push up there, you've got weekly, monthly, all expiration. You've got, Vanna, you've got Gamma up there. It is just chaos, right? And then you look at 75, weekly, monthly, all expiration on top of that. And we even have
All
some
event.
zero. Exactly. So you kind of nailed this, and what you notice, a lot of the resistance is holding, through next week, through the end of the month, even potentially. So to a higher degree, even through next month's OPEX, right? And quarterly OPEX on top of that. But I wanted to just get your general sense of how do you think, just structurally here over the next few weeks, what are your thoughts? Just how are you trading?
Yeah, well, I think, as I said, I think the vol event will satisfy quickly. By this week, I'm aggressively, I would say like Wednesday. And then once that's satisfied, then I've got to pull back, see how skew is being priced. Really, usually in these type of vol events satisfying moments, I think that when you stop seeing under fixing is when you could start getting out of your longs, right? That right now we're under vixing by about 1.5 points. We'll probably under vix tomorrow in a rally, unless they condense all of that to today. And then when we start properly vixing, which maybe even if it's like minus 0.2, minus 0.3, you could start peeling off your longs, and maybe not going short. You kind of have to look, see where you go from there. But it'll probably be around Wednesday is when I would start to look. Wednesday, Thursday, Friday, we'll probably reach we'll satisfy the vol event by then, I think.
Yeah, and I'm kind of looking, if we do, achieve that fall event right sooner, and then we start to retrace. Like, I think to get that larger sell off, like, and what was interesting for me for this week, right, is you have like the 73, 75 level, like that weakens, it fades away basically from a support standpoint after the end of this week. You then look at, for example, even the gamma at 73.50, right? That fades at the end of this week. So this is like a similar blueprint to just last week. And this has been the opposite from when we were very bullish, right? You had your support that just kept going longer and longer, and your resistance fading week after week, right? Now it's the flip side. So for those of you who are not familiar with the term structure, and let me just go down here.
Term structure widgets, what you're talking about. Yeah.
Exactly. Yeah.
Right
these widgets are just phenomenal, right? I'll let you give just a little bit of background here, but how I use it, it helps me identify basically where what strikes, what month, what date I specifically, where I should focus. Is that going to fade? Is it a support? Is it resistance, etc.? So you want to talk a little bit about term structure, but I
the
found
term
it
structure
very
widget.
awesome.
Yeah, the term structure widget is basically we take the whole the normal exposure widgets are showing you by strike what the total dealer position is, but it doesn't break down what expiration they are unless you sit there and click through each expiration one by one by one. The term structure widget clicks through for you, so you know where the total exposure is at each expiration. And it's very helpful because, like you see here, if you want to maximize one of your SPX by term, the bars, you can see that gamma is really large positive for June. Vanna is very large negative for June. So you know that there's a lot of exposure there. And you could go to the by strike, the normal by strike Volland chart. And you could say, okay, where is all this positive gamma? Where is all this negative Vanna? And then you say, okay, well, it's all below spot. It's in the money calls. You can do your investigation there. So the term structure really helps narrow down the expirations that you should focus on. And right now, it's June.
Yeah,
it's June OPEX right now. So that's only 2 weeks away. I guess, with 1 day short because the market's closed for Juneteenth. So it's 9 days away. And that's it. It's getting late early, as I forget who said that. Was that a Yogi Berra guy? Yogi Berra thing. It's getting late early.
Yeah.
So
that's why I laughed.
Yeah. So I mean, I guess we can revisit real quick before we go the bull and bear thesis that we have. I mean, you were fundamentally bullish because of AI, right? And I was fundamentally bearish, mainly because of Vanna, but also, some other macroeconomic things. Did AVGO earnings change your mind at all?
Honestly, no. I'm what I'm looking for is the whole CapEx, the Google spending. Ultimately, if you're going to have big investors like Berkshire coming in, like, I know Buffett is not Buffett and at least at his role anymore, but he probably gave an opinion about that trade. So I still think there's a lot of money funneling into this space, right? And until we see earnings, and I think at AVGO was not sector wide. I think it was very specific to its cause and what, the whole GPU, CPU, TPUs, as I mentioned, right? It's in conflict there. And then not raising guidance or giving a better picture in the conference call did not help. Now, here's what I would say where I'm at right now is ultimately I'm still bullish on the whole AI movement. I don't think it's done yet. I think the industry is still looking to spend more. What I would like to see, as I said earlier with Micron, is I want to see a pullback, right? Ideally, a healthy pullback here. I know we're already at 2 or 3% from Friday. I want to see a bigger pullback, right? And for me, what's important is when you start to look at the SPX, let's say, where we were at was about, from a PE standard, we're at about 21x, right? Before that drop that occurred on Friday. That is expensive for the SPX as a whole, right? And that sell-off now, of course, we've retraced some of it, got us closer to 20. Now, ideally, if we get closer to that 7,100, 7,000 magical zone that we're all after here, that gets the SPX cheaper, right? And I think ultimately that's where Micron around 600 goes to. I think some of these other semis who have just been a straight shot, you get that retracement. That's an opportunity to still long. And I think that bullish thesis still continues at that point. Now, yes, you've brought up some very, very important items. I'm watching out for those. Obviously, Japan, the Fed next week will be critical. And that's, I think, again, you're right. They're going to tighten up. But if the investors have money right now, I'm going to follow where the money's going. Fair?
All right. I mean, for me, nothing has changed on the crude front. Strait of Hormuz is still basically closed. And if not closed, there's a toll booth there suddenly popping up. and it's not exactly an easy pass. Where it used to be 120 something ships going through, it's now about a ship an hour. I do know that America is sneaking other ships out. I mean, these negotiations are dragging on and on and on. Trump really has shown that he's not willing to really reignite war, and that's emboldening Iran. So I think until all that gets straightened out, which, may require more fighting. Last week we saw that the American Strategic Petroleum Reserve is down 7 point something million more barrels. We are now at levels that we haven't seen since the 70s, right? Or the 80s. It's now, that's not going to last, you can't, there is a bottom to the tank, and that, along with monetary policy, expect that to be tightening because inflation is still high. I don't think interest rates will necessarily raise, but I think that we will start drawing down the balance sheet, and that is probably worse for equities than the interest rate. So as far as the AI thing is concerned, I think it's way overbought. Broadcom before earnings was trading at 65x. I know forward PE is like 6x, but that's a projection, right? Like they could be wrong, And
it was also at a market cap of an Amazon almost too before that earnings.
Yeah.
So that's just not
it's a little. It's gone out. I think. Well, I'm not anti-AI, and I think AI is a technology that will be very useful. I do think it is way over its skis. And honestly, I think a tighter monetary policy, even the potential of a tighter monetary policy, could be a catalyst for its unwind. And I will not be a swing buyer until that unwind is over. And, I get more significant confirmation. I'm talking like Micron at like 200. We're talking like some of these AI companies going out of business, supply concerns. That's one thing I caught from AVGO earnings. I mean, I didn't listen to it, but I read enough analysis about it where supply concerns are an issue. China controls the rare earths needed to do this. So that's it's kind of my take on AI. I think it is basically a .com. It is a .com bubble waiting to pop, and so. That's so I am still fundamentally bearish, although, as I just said, as I just said earlier, I'm bullish for this week.
For the fall, the fall event.
The fall event makes me bullish this week. And then, I have to reassess once we get up into that 75 area, 7,600. So my trade is kind of leaning that way. I mean, yes, I have longer term bearish moves, but my more immediate moves are leaning a little bit more bullish right now. So, So, all right. We do have one question. We got 2 minutes to do this. A lot of negative Vanna calls in the money for June. If these calls are going to finish at 100, will the market makers have to buy as soon as they expire? So when they expire, that is an exchange of cash. Okay. People who sold the calls are going to have to give cash to market makers who own the calls, right? And in order to raise that cash, it's a lot of cash. In order to raise it, they're probably going to have to sell some of their portfolio. I'm sure some of these, like call overriding ETFs, etc., I'm sure some of them have a little bit of dry powder cash on hand, but to the extent of this, it's probably, and it'll get blamed on SpaceX, I'm pretty sure. But, a lot of these people are going to have to unwind their portfolio and at least a little bit in order to pay the market makers. So I think that's the latest that we will see the kind of, you have to pay your Vanna will be in the second half of June. I think that's the latest we'll see an initial drop. So, all right. Everybody else's comments are good morning and stuff like that. But so good morning. Good morning, Johannes, Julian. Or as DK likes to say, Johans. Good morning, Johans. All right. Thank you, everybody, for watching, and may Volland help you in your future trading ventures.